My only play is to show us the roadmap. Do an investor day, show us the roadmap, and people will shut up and stop busting his chops. Every day I think about exiting half the shares and moving into Nvidia because I think there's more alpha at this point because I don't know what I don't know. I mean, the market doesn't seem to care. Even when things were going well with the market wasn't getting excited over SoFi. When you make an investment, you're paying the present value for their current profitability and all of their future cash flow. When you look at the numbers, there is nothing more exciting than Nvidia right now.
Ladies and gentlemen, in today's video, we talked to the prolific Seeking Alpha writer and analyst, Stephen Fiorillo. He's a great friend of the channel, so I may be biased, but his breadth and depth of knowledge from high dividend companies all the way to extremely high growth companies like Nvidia gives him an amazing perspective on the entire stock market. We focused on a wide range of topics that you can see in the chapters in this video, but one of them being the potential for selling SoFi for more Nvidia shares. To see more of Stephen Fiorillo's content, you can check out the links down in the description down below. But without further ado, please enjoy the video. First up, let's talk general market news. Trump tariffs just came in. What was your initial reaction to these reciprocal tariffs on all other countries?
It doesn't bother me at all.
Not
I mean,
at
look,
all.
I have a different viewpoint on a lot of things. And if you're an American company and you're looking to place your products overseas and you're getting, and I'm just going to use a hypothetical number because everybody is saying that they're using incorrect numbers. So we're going to make up numbers. Let's put a disclaimer there. If American company XYZ wants to sell products in Europe and a European country is charging a 20% tariff, then we should be charging a 20% tariff on their products and services coming into the US. We should have reciprocal tariffs, in my opinion, because it creates an even playing field. And I don't necessarily have a problem with tariffs by any means. And if we want open and free trade, no tariffs whatsoever. And I'm fine with that too, if our companies don't get taxed. So it's more of a protective measure. And it's very difficult for US companies to create products in the US when labor rates are not the same. We have different regulations, different insurance rates, different cost of business than running an operation overseas. So I would rather see protection for American businesses. And that's the way that I look at it because I want maximum employment in the country. And I am hoping that with all the investments we're seeing from these companies coming back in stateside, that we're going to have a bigger working environment for American citizens. And I'm happy about that. I want to see how it plays out. But I also don't think that now's the time to worry because these talks could change tomorrow. They could change next week. And we're rolling into Q1 earnings. I'm more interested in which companies are going to say that this is going to impact them. If these companies don't say that this is going to impact them significantly, and if the projections for profitability in 2025 don't really change, I think this is a nothing burger, and this is a knee-jerk reaction that will correct itself. If they say, listen, this is going to hurt, expect a downward revision 15 to 20% next quarter after we have more information, then it's time to start rethinking investments and time horizons and stuff. But there's just not enough information. What's happening right now in the overnight markets, it's a knee-jerk reaction. We need to see what the Q1 numbers look like and commentary from the CEOs look like.
But you don't think that it's too much of a stretch for the market to assume that like a company like Apple or Nvidia that does a lot of overseas sales is going to be impacted by this immediately? Like, I mean, there's no assumptions for the 10% rule, you know? So if it's 10% across the board, that is going to impact sales.
So Nvidia, based on what their revenue growth projections are, and with their current profit margin, they're estimated to generate $102 billion of net income this year. If they only generate $96 billion, I don't think it matters. I really don't. They're still going to have tremendous EPS growth. They're still buying back a tremendous amount of shares. I would like to see what the numbers look like and where we actually end up. I don't think that what was said today is the end-all be-all with a 50% reduction of what foreign nations are applying to us in tariffs. I think this is more of a dial. I think that it's going to get fine-tuned. I think there's going to be exceptions. And I think that this is not the final word on it. So I'm not in the same camp that this is doom and gloom yet. Maybe I
Sure.
get there in a couple of weeks or a couple of months, but right now I don't have enough information.
That's fair enough, especially in this environment right now. Things are changing really quickly. That being said, though, large companies, large buys. What are you doing right now?
I'm buying more Nvidia.
Nvidia?
Yeah,
Is that the big purchase name today, or
it's been for the past couple of months. I'm not buying other than block. I'm dollar cost averaging into it because I
yeah?
do think that it's undervalued. But there's a couple of companies out there that are grossly undervalued. Nvidia is one of them because if they generate 96 billion instead of 102 billion, it doesn't change a thing. And the amount of forward growth, we're not even scratching the surface on what we're going to need these chips for. Nvidia has no competition. AMD is not going to penetrate their moat. It's just not going to happen. You think about Blackwell, you think about Blackwell Ultra, you think about their roadmap. Nobody's messing with them. And I got news for everybody. When you look at the amount of GPUs that are being ordered, none of these companies are switching to another vendor when they go to upgrade. And the beauty about NVIDIA is you don't have to rip and replace everything for it to work. You can go one by one and integrate. So they are golden. All that matters is CapEx spend continues to go up or maintain at this level. And there is every indication that we need so much more compute for what is coming that CapEx spend is likely not going to recede. So I think this is a gift. I think if NVIDIA goes to 90 or 85, I'll probably be selling a bunch of REITs and moving it in. I could not be more bullish on NVIDIA. And this is coming from somebody who was an NVIDIA bear previously. So for me to come around on NVIDIA because the story has changed, and for me as what a lot of people like to say is a value investor, when you make an investment, you're paying the present value for their current profitability and all of their future cash flow. When you look at the numbers, there is nothing more exciting than NVIDIA right now.
Nothing.
Nothing. No, nothing.
I also agree. I mean, the only two stocks that I've bought over the last like recent history is Robinhood and Nvidia. So yeah. That being said, I want to keep on this for a second. The only problem that I have with Nvidia that I keep going back to thinking about is you're completely right. The amount of GPU usage that we need is like seemingly getting larger and larger and larger, way higher than I could have ever have fathomed. But it's not like these companies have unlimited swaths of money. Like the rate in which they're increasing their capex
What?
is
Oh, let's go back to that comment. Don't even finish that. Don't even finish that. You just said that these companies do not have an unlimited swath of money, correct?
yeah.
Okay. So while
Okay.
the word unlimited is a word that, could mean infinite,
Let's say this year I think over the top four companies there's
320 billion.
yeah, right?
Yes.
Does that get to 500 billion? Does that get to
It could
800 billion a year
easily get to 500 billion.
on those four companies?
Easily. And within 2 to 3 years, yes.
You know, and that's just the problem that I'm seeing is like, okay, so
I guess while you're talking, I'm going to build out a new chart for you.
you don't have to build out a chart.
No, I
All
have
I'm
to now.
stating is they need to see some sort of return, and that's not going to be on image generation right now.
You just did it. You just did it. Oh, no. You didn't just say that to me. Did you really?
I'm fully aware that artificial intelligence is going to change the world. I just think that there might be, or at least what the market is also perceiving, a slight pause in this adoption as people need more use cases, almost like an internet bubble in a way. Not now, I don't want to use words like bubble. I don't think that there's a bubble here at all, but a growth stagnation until a reacceleration where we can find more opportunities. Because image generation right now is not what we're going to be buying hundreds of thousands of GPUs to try to fix.
I'm trying to not get angry right now.
Now,
because I know that you look at the numbers, and that's why I'm trying. Like, I think you're like trying to bait me right now because I know that you look at the numbers, but at the same time, I just can't believe you're saying what you're saying.
I'm saying this is a real I don't even want to call it a bear case, but it is a potential that investors, I think, are really taking into consideration. Ladies and gentlemen, we're back. Steven took some time to build his presentation here, or his charts. Go ahead, share them.
So I was doing it on the fly, and we decided just to wait, so there wasn't a gap of a couple of minutes in here while I aggregated the information. Nothing pretty. It's just going to be straight math to prove Tanner wrong. So Tanner made the lovely comment that these companies do not have infinite amounts of money to spend on capex. I respectfully disagree, and I will use math to prove my point. All right, so we can see everything. So infinite, obviously, nobody has infinite money because that just continues to be. It's just ongoing. Whatever you did, leave it like that, please.
Okay.
I can actually see the bottom. Actually, no, you don't. Yeah, leave it like that so you can see the bottom. So Alphabet, which is here, increased their free cash flow by $3.3 billion year over year, while increasing the amount of capital that they generated toward capex by over $20 billion.
Yeah.
Microsoft free cash flow went down by $4 billion, but they still generated $70 billion in free cash flow after increasing capex by $11 billion. Okay. Amazon increased their free cash flow by $661 million while increasing capex by over $30 billion year over year. Meta, same story. Free cash flow increased $10 billion, and they spent an additional $10 billion in free cash flow. So in 2023, these companies generated $376 billion in cash from operations. They spent $156 billion on capex, and their free cash flow was $219.85 billion. They are funding this expansion from profitability, not from the debt markets. Now, 2024 comes. Their cash from operations was $458 billion, and they spent $228 billion on capex. And their free cash flow is $229 billion. So when you look at the chart, the table here, their cash from operations just for these four companies increased by $81.73 billion year over year.
Yeah.
Their capex increased by $71.8 billion, and their free cash flow increased by $9.89 billion. So yes, they can continue to keep doing this because they continue to generate more cash from operations from their businesses, and their free cash flow is actually growing while capex is drastically growing. So they can keep this up as long as this trend stays. They can keep this up indefinitely. And Alphabet is the perfect company to look at why this is. And the reason I say that is because I already have the chart built in an article. I just got to pull it.
Okay. I'm going to refute what you're saying here, right? That there's things that I disagree with what you're saying.
You can refute whatever you want, but hold on until you see this. And math is hard to refute, by the way. So
no, yeah, I'll use math to refute what you're saying.
Sure. So Alphabet's cash from operations continues to get bigger, and their capex continues to go up. But all the investments they're making in capex helps push their cash from operations up. These companies are not done monetizing how much cash from operations they're generating. They are not tapping the debt markets. They're growing free cash flow. And all this organic expansion is happening from free cash flow. So do they have indefinite amounts of money? No, because nothing's unlimited. But are they able to continue spending at this rate and continue increasing at this rate? Absolutely. Now, is there a time when that's going to change? Probably. Is it this year? No. They all said they're going to spend more. They're going from Where they spent 228 billion last year or 2024. They're spending 320 billion this year.
Okay,
And
I gotta cut you off on this diatribe because the part that you're missing, of course, I mean they can continue to spend more. The problem is that in the numbers that you just showed, the capex is increasing much faster than the free cash flow is increasing, which means that the margin is decreasing. So investors are not going to put as large of a multiple on those
you're
companies.
hurting my head.
No,
You're
I'm
hurting my
not.
head. Oh
So
my God.
all
You're
I'm
hurting
saying
my
is
head. Hold
you're
on. Hold
no,
on.
no, no. Hold on.
No.
Back whenever Meta was spending a lot to build out their AR VR, investors like Altimeter Capital said, "Hey guys, you can indefinitely do this, but investors are going to be upset at your profitability as a margin going down. Like people want profitable businesses." So I think that the and now 100% I'm on the belief that artificial intelligence and everything. I'm playing devil's advocate here, but there is a story to be said that the amount that they're increasing, and by the way, you didn't even give projections on 2025, is not as exciting versus the amount that they're spending on capital on capex.
So let's go back to this. You look at Alphabet, once again, they're doing this while buying back over $60 billion worth of shares. They are still wildly profitable. And while free cash flow is not growing at the same rate, it is because they're plowing so much into CapEx. And the big thing to remember is CapEx is making cash from operations jump tremendously. And if that continues to happen, it won't matter because these companies are all, Amazon's the only one that does not have a big buyback program. These companies will still continue to buy back shares at record amounts while expanding CapEx. And then when they're done building and they go to maintaining, they'll be able to drop CapEx and pump profitability, and you're going to see a huge surge. And free cash flow doesn't need to keep pace with CapEx by any means because that is not where EPS is generated from.
How is
That's
$70
generated
billion
from
dollars?
operations.
How is $70 billion dollars of capex spend for Google going to generate 70 billion or more from cash from operations from Gemini, for example? Obviously, they're generating more through Google Cloud, but like they want to match that supply. But that's not even where the majority of where they're making that profit from. It's all from Google search, and that's not all where their capex spend is going right now.
No, their CapEx spend is going to data centers because they can't even facilitate the amount of demand that they have
On cloud, you mean?
on cloud services.
By how much?
Oh, they said it on the conference call. They can't keep up with demand. I mean, that's
Yeah,
pretty much a recurring theme with these companies.
yeah, but it's still a small percentage of how much they're spending. Like Google
It,
Cloud's still
but
tiny compared.
it is growing. And if you believe that AI, in whatever form it's going to take, is going to be the future of compute, it doesn't matter.
If you believe,
If you believe,
if
if
you
you
believe, so this is
if,
all.
if you believe that everybody else is wrong and you take a different approach, you could be one of the greatest investors in the world if you call bullshit on this and you end up being right. But when you have this isn't, but here's the thing, this isn't one company saying this. And that's why I'm fully convinced. And I think that's why you're in Nvidia, because you called Nvidia before everybody, maybe not for these reasons, because you were in it well before
Right.
AI,
Yeah.
but you were the early person on Nvidia. Now, this isn't just Microsoft saying this and everybody else looking at them like they got four heads and like, oh, let Microsoft burn through their cash. They're wrong. Everybody is on the train. Everybody is on the train, and they are
Not
all
everybody.
everybody
Alibaba.
everybody that matters.
Alibaba just said North America is overspending on data centers right now.
And we'll
Is everyone
see.
making a mistake?
And we will see if Alibaba is correct, but they may just be saying that to try to get them to slow down and second guess themselves.
I also agree that with that.
So,
Remember, I'm playing devil's advocate
no,
here.
I get it. But when the smartest people in the world, okay, like these are the smartest people in the world. You don't just have one company. You have the big four, you have Oracle. And when you go to Q2 2024 and you read through it, do you mind if I bring it up so I don't misquote
Sure.
it?
I know what I know the quote, but
You know what I'm going to say, but this is
yeah,
very, very serious. And let's put it in context. When you look at what Larry Ellison, Sam Altman, and Masterson said at the press conference with Project Stargate,
yeah,
and then you look at what I'm about to put on the screen, it really puts things into perspective about where we are. And Larry Ellison said this in the middle of last year. So I have it right here. And Oracle is a company that not a lot of people pay attention to, but they should. Now, they said
Zoom.
more. Okay. Uh, I just lost it. I'm sorry. Where did it go?
It's right there.
Oh, there we go. Okay.
It should be about the
That's
revamping,
not
like
it.
I think it's 66 new,
Yeah.
or they're creating 66 new data centers and revamping all
Here we
one.
go. Yeah. So Oracle is in the process of expanding 66 of our existing cloud data centers and building 100 new cloud data centers. We have to build 100 additional cloud data centers because there are billions of dollars more in contracted demand than we currently can supply. And that was before the arms race for AI really took off. That was before all these companies came out with their 2025 CapEx spends. That was before Project Stargate. That was before the Optimus platform with Tesla, Figure Eight, Aptronic, and all those companies. That was before the Nvidia press conference that showed we need 120 to 150x compute for what's coming. So you have the smartest minds in the world that are all betting the future of their companies on this. And they are all saying that what we are going to be able to do in the future, we can't even imagine right now. And this is going to be the backbone of it, the way that networking equipment was the backbone of corporate infrastructure. And they have not been wrong yet. So think about this. Everybody thought Amazon was crazy with AWS and
Mhm.
hosting in the cloud. Everybody was like, cloud, I want everything on prem, blah, 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 blah. People thought Amazon was crazy. Microsoft didn't. They got into it, and then Alphabet, and then everybody else. And now you have a bunch of companies that can't compete. I happen to love Cisco as an investment. I'm a shareholder. They're not really competing in cloud. IBM, not really competing in cloud. All those companies got left behind because they were not as proficient as Amazon and Microsoft in the beginning. And the only reason Alphabet is able to scale the way that they are is because they already had a big infrastructure with Google Suite, and they have basically an unlimited amount of money to throw at this and get users and provide an alternative option to the Microsoft environment for businesses. And they are grabbing market share. But outside of those three, cloud providers, Meta's not a cloud provider, so we can't put them in there, are not slowing down on this. And it was something that was a huge win that the companies that did not invest in it lost a lot of ground and they will never catch up. And now you have the four biggest, well, it's hard to put Meta in there because they're not a cloud player. But you have the three biggest cloud players and four of the seven largest companies in the world all telling us that this is the future. Don't worry about what we're spending on this because in a couple of years, you're going to see why we have to do this if you
Yeah.
don't already believe it. And for companies in other countries to say North America is overspending, if we were, Jassy would not come on the conference call and say we're spending 104 billion on capex, and I wish we could spend more. Like he wants to spend more. I mean, these companies are now in a prisoner's dilemma because if any of them slow down
Right.
and the others don't, and they get the next generation chips that can outperform so much more, they'll be able to advance so much quicker than the competition. So they all have to keep their foot on the pedal. It's one for all and all for one at this point. So the spend's not stopping, especially when they're not tapping the debt markets. I mean, these companies, other than look, Microsoft and Amazon have debt on the balance sheet. Alphabet and Google do not. I mean, Alphabet and Meta do not. But there's other reasons why Amazon and Microsoft have larger debt loads, but their debt loads don't matter compared to the EBITDA or the cash from operations and free cash flow that they're generating. I mean, these aren't companies that anybody's worried about defaulting on loans.
Yeah.
So
Yeah.
I'm not buying any of it that these companies are making a mistake. It's just, I don't think it's possible at this point when you have seen anybody who has really been in technology for 30 years or so and seen the advancements. Technology does not slow down. It only gets quicker. And the next 10 years are going to make the last 30 years look like it was just jogging. Like we
So
are at an inflection point right now.
I I agree with you that technology does not slow down. But during the times of early 2000s, companies like Amazon were greatly overpriced and then greatly underpriced while people tried to figure out how useful this is. Now, I
Yeah,
think a lot of people,
but what you're saying is a lot different because at the time, Amazon was just selling books online. They weren't a cloud infrastructure company, they weren't a logistics company. They were an overpriced company for what they were at the time. And they deserved to fall the way that they did. But that didn't mean that the business couldn't survive because it did.
yeah, but I think a lot of the future companies of this, like I'm a big believer that CoreWeave is going to be one of the larger companies in the
Oh, I'm
market.
waiting. I'm waiting for that to sell off a lot. I would like to, if that gets to like 20, ooh,
I don't know
I'm,
if you'll
I'm
ever
gonna,
see that.
I don't know if we will. If that gets to 20, I'm going to go heavy on it.
Because I think that is so whenever you're talking about these companies that are making their money or primarily focused on artificial intelligence, there is going to be sentiment changes. Like
Well,
whenever
of course.
the cost of operating some of these new models, like what ChatGPT is putting out for their image generation, like there's just no return for them. I don't care how many subscribers they get. Each individual subscriber is losing them money if they are generating, image after image after image. And so they're having to start rate limiting now and all these things. So you're going to see price increases per customer. They're not expecting to see profitability for many more years. And yes, they're going to get a lot of market share during that time. But like during that time, I think a lot of companies can get repriced. 5 years is a long time. So that's all I'm saying.
It depends how you look at things. I don't think 5 years is a long time at all.
Sure, that's fair. But an entire great financial crisis can happen in 5 years.
Sure, a lot of things can happen in 5 years, but a lot of people who are long-term investors expect to hold a company at least 5 to 10 years.
Yeah, yeah. Oh, yes. Yeah. I'm not saying that the companies won't be better off 5 years from now. I'm a full believer in artificial intelligence, but there could be some shakiness.
I'm not saying that there isn't going to be shakiness. You
You
know,
know,
Nvidia could go to 80. There's no reason why it can't do that if we get a bigger sell-off. But is it going to stay there is the question. And I don't think Nvidia, I was under the impression before Jensen's last conference, I really thought, and I've said this to you, I've said it to him, and I've said it to a lot of people. I thought the runway was 18 to 24 months of a super build out, and then we're going to a maintaining phase. And I was going to look to get out of Nvidia in roughly 12 to 16 months because I would have
that build
made
out
it.
is longer than you thought, eh?
I really do believe that this is more like a 5 to 7 year build out, and that the large build out that's going to happen, the maintaining phase is going to be so big that even if it just plateaus, they're going to be making so much money
Yeah.
that they're just going to, even if the net income doesn't grow or the earnings from operations doesn't grow, whatever bottom line metric you want to use, they're just going to be buying back so many shares. Their EPS is going to explode.
Yeah.
I
Yeah.
just, I mean, look, this company, they bought back $60 billion worth of shares this year, and they're projected to do 102 billion in net income. They're going to do $2 billion a week in profits. Think about that. $2 billion a week in profits.
Yeah.
So you're telling me you want to bet against that? Like,
Yeah.
really? And that's what gets me. It's like, okay, I get it that stocks can go down. It absolutely can. But it amazes me that people want to bet against Alphabet for whatever reason. And Alphabet's in a bear market right now. But when you look at it, they're trading. It is disgusting. Alphabet is trading at 13.25 times 2027 earnings. They're trading like a tobacco company. It is disgusting. It's absolutely disgusting and despicable. And I don't get it.
I think now I'm a Google shareholder, and mainly because honestly, I think that
Because of me, be honest.
because of you, but I also think that a lot of people are really underestimating cloud. Like I think that people look at cloud like it was like almost like smartphones, like it's almost hit its penetration. Where, in my opinion, I think cloud has like multiples left to go.
So I'm going to give a little bit of insight. And I think I have a personal opinion of why I think this is in the realm of investors. I don't think investors per se look at or have access to what companies are spending on their technology infrastructure. And whether you're at a small business, a mid-sized business, or a large business, okay, you look at Amazon, Amazon's got hundreds of thousands of employees. I don't think people think about how much, or they're not exposed to how much they spend on back office infrastructure. Same with every other company, unless you're in IT or you're in a forecasting or budgeting position in the fiscal department or you're the CFO. It's not something that's going to be on your radar. But if you stop and just do 15, put in just a couple of chat GPT or Grok searches or Gemini, whatever you want to use, and just start looking at what does back office IT infrastructure entail for a company larger than 100 people and then larger than 1,000 people. I think that people would have a much better understanding of what it takes for corporate infrastructures to run from a cloud environment, from a data center environment, and how many different components go into it. And, you know, companies offer a lot of different products. Microsoft doesn't just make their money on Office or Windows.
Yeah.
They have a huge licensing for pretty much everything under the sun. You have Azure, you have security products. I mean, there's so many different things that go into it, and data backup for the cloud. Like, just because you put your stuff in through the 365 environment does not mean that it is backed up. And then people get that mistaken. If there's a data breach or a hack, you really should have everything backed up through a third party, whether it is an on-prem or a cloud infrastructure. Like, the growth in cloud, it has been and is going to continue to be so big because we are putting so much more data in the cloud. And you think about just a regular computer, that's probably the best way to describe it. Back in the day, having 100 megabytes was like tremendous. And then when you had a gigabyte on a hard drive, it was mind blowing to a lot of people because those people remember what a floppy disk was. Okay. And now getting a laptop with 250 gigs is standard. And
If not small.
no, and the amount of data that a video, and think about how much is now video, right? So think about how much more content is on YouTube and how big those video files are, and they're constantly being uploaded. Everything has a larger capacity, and you need more storage, and that's not changing. Files are bigger because you're embedding more stuff into it. Companies are throwing PDFs, Word docs, Excel files, video files, polls, I mean, everything into their environment. Policies and procedures, everything.
Mm-hmm.
These are not small files. And when corporations grow and everybody is now using OneDrive or SharePoint because they're not saving on their desktop because they want to be able to access it from anywhere, you need more storage. Like, the cloud storage is nowhere near done. Nowhere.
And I don't even think it's just that. I think that tapping cloud for compute, like for tokens, is going to be a big thing. Like think about me. I've been looking at ChatGPT recently, and I'm like, hey, would I pay a thumbnail artist, or would I pay for a ChatGPT subscription to create my thumbnails going forward? Because it does it at the same level at this point. And now Sam Altman's talking about Images version 2 coming out, which is going to get even more accurate. And then you start to think out, okay, what is Disney going to do 10 years down the line? Are they going to pay for 1,000 animators for their next movie? or are they going to pay, the technology expense is going to consume a lot of what they paid for headcount. And the cloud providers are going to be tiny employers. You are going to be putting a large amount of your expense, what you used to put in for human capital, you're going to be putting in for AI tokens.
Yeah, and let's expand on that thought. We haven't even gotten to the point of CGI and AGI now. And you are going to be making movies and TV shows without humans.
Yeah. Or
So,
very few.
or very few. So where we go from here is going to be crazy. We're going to be living in a sci-fi movie. And you think about movies from the 80s, a lot of stuff is coming true. And
Yeah.
we're not even scratching the surface on genomics. Like, I think Larry Ellison's 100% correct. And I think we're going to see tremendous medical breakthroughs over the next decade that we can't even wrap our brains around at the moment
Yeah.
because of advancements in AI. And the amount of money that these companies are plowing in, they would be buying back their shares hand over fist if that was a better opportunity for them. They're deploying this money because they know if they don't, their competitors will. And if they don't, they are going to be lost in the race. And they're creating such a big moat, nobody else is going to be able to compete with them on this front. Nobody.
Yeah.
And
I think there's a lot of areas of disruption going forward. Like, this is why I don't want to touch, and maybe you have strong opinions on these companies, but like Adobe or some of these businesses that, like, I don't know where those tools are going to be going forward. But in terms of cloud, I literally have zero reason to believe that there's any disruption coming from cloud. I can only see more usage going forward. Unless there's some quantum breakthrough and it just means that every database that's ever been paid for previously then is sort of wasted.
I mean, Jensen was saying that quantum is like 10 or 20 years out. I mean, I don't know.
I mean, he has a biased perspective for sure, but
I don't know, does he? I mean, it can only help with what he's doing, unlock more stuff quicker.
yeah, but it also means that they might not be the, chip provider of the future.
So share my screen real quick. Like, only look at, I'm going to delete this so nobody looks at it and we only focus on this. Where these companies are trading right now is
Can you
crazy.
zoom it in a little bit?
Yes, I can for you. Sure. We're now in a position where Altria Group, which is a tobacco company, is trading at 10 times 2027 earnings. Alphabet is trading at 13.25 times 2027 earnings. It is basically trading like a tobacco company. I mean, that's pretty crazy considering tobacco company has 6.5% growth from the end of 2025 to 2027, and Alphabet's got 32% EPS growth. So that's a little crazy. And then Nvidia, 43% growth, and you're the one that's always telling me you pay for growth, you pay for growth. Well, why would we not want to pay 17 times 2027 earnings for Nvidia when Clorox is trading at 19 times? Like, I don't understand that. It makes no sense to me. Amazon.
And further over, you have the growth rates there, which Altria is expecting 6.5%. Clorox is expecting around 7%, where Nvidia is expecting 43% forward growth. And that's on Wall Street expectations, which I assume is what you're grabbing, consensus.
Yes.
For which they've had to increase their expectations every quarter for the last multiple years.
and think about Amazon. Amazon is expected to grow their EPS. And this is not including this year's growth rates. This is from the end of 2025 through 2027. This is what the consensus projections are. Amazon is expected to grow their EPS by 50%. They're trading at less than 21 times earnings. And people are paying 19 times for Clorox and 43 times for Costco.
Yeah, it makes me sick looking at the Costco one. 43 times is ridiculous.
It infuriates me. It absolutely infuriates me. And Nvidia at this year's earnings is trading at 24 times. Like, 24 times is borderline value territory for companies. I mean, I am
Yeah.
sure that if we go into the value index, we can find companies that are trading at that level.
Yeah.
And you look at next year's earnings, because people don't like going out to 2027 too much time, but next year's earnings, people don't necessarily have a problem going to. Okay, so Alphabet's trading at 15 times, Nvidia's trading at 19 times, and Meta's trading at 20 times. Yet
But
people want to buy Clorox for 20 times. Like, I'm sorry, it's Clorox. Like, what are we
I
doing
actually think that there's like a real fundamental misunderstanding, and I actually get why the market is saying this, but they're essentially saying Nvidia is going to make less than what they're making today. Like,
all right, so here's when I look at this from a business perspective, okay? Clorox generated, and I am not going to misquote anything, okay? So we're going to type it in, CLX. In the trailing 12 months, Clorox has generated 457 million, okay? Million dollars.
I heard you say this on a mid. I don't care about this statistic at all.
No, but just hold on. Costco trades at or generates $7.6 billion.
I'm just gonna swap out my camera battery real quick. One sec.
Alphabet generated $100 billion. So you're telling me you would rather pay a higher multiple for a company that Alphabet generates more profitability than in 2 days out of the year, and then
Yeah,
three
but
and a half weeks?
that
I mean, no,
doesn't
but I'm
matter.
just saying, like, profitability matters. They have more growth. Alphabet has more growth on the horizon than both of those companies. When you make an investment, you're paying the present value for the future and present cash flow and profitability. So why would you pay more money for a company that has less growth and generates 2 days worth of the profit another company does?
I can tell you why. Okay, so here's one thing. I've never believed that looking at a company's multiple leads to any form of alpha. You know,
Okay.
everyone has those. Everyone has these numbers. So whenever I think about Clorox, who's their disruptor? Who's the
Oh,
next?
really?
Who's the next upcoming bleach
Okay.
company?
So, but think about it like this: they're considered recession proof. Okay, but nobody's using more Clorox in a recession. It's
No,
just
I'm not. I'm not.
no,
I'm not
no.
saying that.
I get it. I'm going to answer your question. It's something you buy to keep in your pantry. Okay, their primary things are Clorox and disinfectants and mops. Okay, they compete against companies like Procter and Gamble, and they create the big business is private label stuff and eco-friendly. So you have a big movement with eco-friendly, and they are losing market share to eco-friendly products. You also have private label products that are sold by companies such as Granger and other distributors,
He
3M.
recently. Uh, so everyone go to seekingalpha.com/Stephen Fiorillo. He just wrote an article on Clorox. So
Yeah, I'm hot on Clorox. It's my new rant other than Costco at the moment because it just doesn't make any sense.
But
But
I think that the market is also looking at companies like ChatGPT and Perplexity and all of these companies as real possible disruptors for Google search, which is still, I know they have other forms of revenue. I'm hot on Google stock right now too. I'm bullish, but there's possibilities where they make less than they did the year prior on
absolutely
their largest
possibilities.
earner.
I could win the lotto tomorrow. That's possible.
But the chance that Costco makes less the year prior is you could put it near zero.
Margins, you don't know.
You could put it near zero.
I mean, Costco's profit margin is like 2%.
I get it, but the subscriptions are also, they grow every quarter, they
Oh,
grow every
great.
year.
Subscriptions grow every quarter and every year, but their profit margin is still 2%.
I
I
get
mean,
it. All I'm saying,
the business is so expensive to run. Same with Clorox. These businesses are so expensive to run. And the problem with Clorox is their revenue grew by 26% over the past decade, yet their profitability decreased.
I think the funny part is like you're going to pay half the price for Amazon. Like they're not going anywhere either. They're not going to make less the year prior. You know, the
No.
same sort of sticky environment that Costco has, so does Amazon. And then you also get to tack on the futuristic bets that they have, like Zoox and you know, the satellite broadband and Prime and AWS and all of those things for a 2021 multiple versus a 43 multiple of Costco.
To me, it just doesn't make any sense. And I'm not taking anything away from Clorox or Costco. What I am saying is, if Clorox is a 20 PE, okay, we should not be paying less than 20 for Alphabet, Meta, Amazon, or Nvidia. That's where I'm getting at. I'm not saying that Clorox is necessarily overvalued. I'm saying that the Mag 7 are undervalued. And if that's where you want to put Clorox and companies like Pepsi and Coca-Cola, the Big 7, I should say Mag 6, because I don't consider Tesla part of it, should be nowhere near it. Nowhere near those companies. They don't have the balance sheets of those companies. They don't have the profitability of those companies. They don't have the growth rates of those companies. So they shouldn't be trading at those companies' levels.
See, that's the interesting part about the market that we're in, right? Is like the largest companies in the world, people look at and they say, well, I don't want to buy this company because it's already in the trillions. But the growth rates are still super high, double-digit growth rates, and the profitability is
And
still
it's
growing.
funny
Like,
because back in 2021, when the market was going haywire, and I was like, this doesn't make sense. This isn't going to end well for a lot of people. And everybody was going SPAC heavy and this and that. And everybody expected to make 50 or 70% a year. Otherwise, you didn't know how to invest, et cetera, et cetera. You had all these people on TikTok telling you how they're just going to buy this and that and blah, blah, blah. They're never going to have to work again. Where are all those people? You know, everybody used to make fun of me in the comment section of my articles that I don't understand growth. I'm a boomer. I'm a value investor. But you know what? I happen to like getting good value for my money. And at the end of the day, paying a lower growth rate for a higher PE for a lower growth rate company goes against what everybody was saying in 2021. So it's funny for people not to want to pay a lower growth rate or a lower multiple for Nvidia now when it has a huge growth rate. And okay, it's not growing earnings by 80%, but guess what? Their EPS, they're going to add $40 billion or so to their bottom line this year. So does it matter that their EPS is going to grow by a fraction of what it used to? No, they're generating more earnings growth in pure dollars than half the companies S&P generate in a year, if not more.
yeah.
So what are we like? And this is where I get so angry at the inefficiencies in the market, because everybody was growth at all costs. And now you have the same companies that are still putting up crazy growth numbers, and Nvidia is legitimately going to add 40 billion if nothing changes to their bottom line. And people are like, no, I don't want to buy that. What do you think they're doing with that additional $40 billion? They're buying back more shares.
Yeah. And it's interesting. I don't follow Wall Street too closely on their pricing of companies and everything. And I find that they stick close to consensus. That's actually not the case for Nvidia at all. I think they have like an average price of like 180 right now. Like for a company of their size, the average price target that they have on this company, like they expect such great things. And I even think that their growth rates for 2026, fiscal 26 and fiscal 27 to be much lower than what I actually think is going to happen. So,
I mean, they're expecting, this is crazy. I got to share this.
I think it's like 54%
What they're
next year.
expecting is crazy. On revenue growth, 55 analysts, the consensus is 56% revenue growth this year. And that's 55 analysts. You don't really get 55 analysts to cover anything.
And you know what? I think that that's actually a low estimate.
Let's just use these. And then after 56% growth, okay, in revenue, next year, 50 analysts, the consensus is 23.5%. And that 23.5% is $48 billion of revenue growth, of which they have more than a 50% profit margin. And then 21 analysts, which is kind of unheard of for 3 years out, are saying that the revenue is going to grow by 16.5% the following year. So it's crazy. The growth is crazy. They're going to add $100 billion or $90 billion of revenue over the next 2 fiscal years, not including this fiscal year, but 2026, 2027. And the only reason it says Jan 2026 is because their fiscal year ends at the end of January. It's really their 2025 fiscal year. So you're not waiting a whole extra year for this.
Yeah, and to
And
be
their
honest,
EPS, same thing. Huge double-digit growth.
I have no
Huge.
reason to believe that 2020 fiscal 28 is going to be even growing that slow, because you have things like their, Feynman architecture coming out that's expected to be like 28 times stronger or something like this, 21 times stronger
I'm
than
going to make a prediction.
their Blackwell chips. Go ahead. Oh, actually,
Double.
could you go back to that Seeking Alpha? You were on the earnings estimates. Go to the earnings revisions. Like, they thought they had Nvidia figured out last year, and then they've had to increase it.
So my prediction, double-digit
Look at that.
double-digit revenue and double-digit EPS growth for the next 7 to 10 years.
Okay. Yeah. Sorry. For a second, I thought you said triple digit. I was like, what are you talking about?
Double-digit on both top and bottom line next 7 to 10 years, because that's how long I think the build-out's going to be now.
Well, definitely on a compounded annual growth rate. That's in my opinion, it's a guarantee.
I mean,
But look at that though. This
it's
is what they're
crazy.
saying right now. Look at the trend. So how wrong were they if they were to have expected how many years down the line they were expecting Nvidia to do just a couple of years ago? Do you get what I'm saying?
I do.
So what trajectory are we headed in if they can't wrap their brains around the total addressable market for artificial intelligence? And I still don't think they're anywhere near it. Like, we're getting all these revisions, and OpenAI is spiking up in their valuation because they put out accurate image generation. That's nothing. Like, they don't even have APIs for it yet. Like, they can't even offer that to other businesses.
Wait until they do video. Wait until they do everything else.
With accuracy, right? That's the important part.
Yes.
They were doing images for a long time, but they were shit.
This is going to be like nothing we've ever seen. And I want to know where all the people were that were growth at all costs. Where'd they go?
I don't know. I think a lot of people just see the run up in Nvidia and they get scared of buying a company that's
It was
made up
at
so much.
154 a couple months ago. I mean, there's no run up. It's at 104 right now.
No, but
it's in a bear market.
It was at 10 not too long ago.
but legitimately, it's in a bear market.
Yeah.
And nothing has changed with the long-term trajectory of this. And the fact that companies like Walmart and Costco are getting a bid, it's like, really? Why?
Yeah.
Because people have to buy food? I mean, I'm sorry, but that's not, we need to rethink what is recession-proof. And I'm not saying that Walmart and Costco aren't recession-proof, because they sell food, water, staples, things that people need. But they're certainly not going to grow a lot. And people are still going to buy on Amazon. Amazon didn't decrease the amount of revenue they generated when we had recessions, nor did Alphabet. So what are we really thinking about when we think about recession-proof companies? I'm thinking about who's got the biggest balance sheet, who's got the biggest cash pile, who's growing EPS, and who is putting up ridiculous profitability. And it's not Costco or Walmart.
There's a lot of people that I think, well, one, I always focus on the almost micro of companies, understand the quality of those businesses. And then there's many people that try to invest in this macro. But I think that there's a macro that's even bigger than that, and a much larger one, which is just the technological macro almost.
Yeah.
Like, people are trying to find these small recessions and not seeing the overall trend changes.
And how about buying in recessions is probably the best time to buy?
Sure. Except people don't often know whenever they are in those times.
But that's why you got to just continuously buy. I can't predict when the market's going to bottom or when it's going to top out. But I bought on Monday when it was going down. Went up yesterday and then went up today and then tanked after hours. I'll buy again next week. I'm going to keep buying.
I'm trying to find this quote. I'm going to misquote it because I can't seem to find it here. but I think it was Don Valentine said something about the way that he invests is that he understands Moore's law, or he reads about Moore's law and tries to understand the consequences. And that's like the most easy way to invest in semis back in the day of
Sure.
like, just understand the multiplier here and then understand that Nvidia is breaking that law on the upside. They're accelerating compute faster than Moore's law by like a great margin. How has that worked out for semis in the past? I mean, going all the way back to even Intel early days and seeing what type of investment this means going forward. I mean, it's
Well, and
just,
remember, when you talk about semis, a lot of people bring DRAM into it, and they love talking about DRAM cycles. But look at Micron. Micron's done phenomenal the past couple of years.
yeah.
And I
Yeah.
actually think that they are an undervalued champion that's going to explode because the amount of DRAM that we're going to need and all the new servers is going to be incredible.
I don't have any Micron, but I do have some friends that are trying to get me into it.
If you did the research on them, I think you'd start really getting interested. Their high bandwidth memory is very interesting. And it is just, I mean, they're another one where their estimates, their year-over-year EPS growth this year is supposed to be over 400%, and then over 60% next year.
Just really quick, I looked up the Don Valentine quote. I found it. Whenever asked on his successful investing in semiconductor plays, he said, "I just follow Moore's law and make a few guesses about its consequences." That is as easy as it is. Holy. One of the greatest investors of all time. He founded Sequoia Capital.
And what's the consequence of trying to go against Nvidia right now when there's no competition?
Against it meaning don't have allocation?
I'm just saying, like, thinking that somebody else is going to penetrate their moat or not having allocation or thinking that this is a fad. Like, I'm sorry. Companies are not spending. All right, let me rephrase that. Nvidia is not generating hundreds of billions of dollars of revenue if their products aren't worth it. This isn't a fad.
Yeah. Jensen has famously said that if his competitors' products were given out for free, people wouldn't buy them over their products.
Exactly. Because everybody else would be using Nvidia's products, so the other products would be inferior and they'd be behind the eight ball.
Yeah. Yeah. And you have to remember, like, things like CUDA were not built overnight. These took decades to build. They made such a massive investment going back all the way to like 2014 building CUDA. And that is giving them such an advantage that's so hard to catch up with.
And how about this? Wait till they really get into service revenue.
Yeah. I mean, they're
They're
doing it now.
Look, they're going to take a page out of Cisco's book. Cisco was predominantly a hardware company. All their revenue came from it. They have now diversified into services and subscriptions, which is now half their revenue, roughly.
Wow.
Nvidia, I'm not saying half their revenue is going to come from it, but they're slowly building out their services and subscriptions, and they're going to create a full-blown business the way Apple did with services.
Well, one thing that I keep looking at whenever they invested, I think it was Series B in CoreWeave, and I'm like, I wish you guys just took a way bigger stake in this company, like own the business. Like, I don't know. Either way, it's still great to have companies like that. And by the way, CoreWeave, look at the GPUs that they use. Find a different name other than Nvidia on their list.
How about XAI needs double the amount of GPUs it currently has?
I mean, that's probably even short of what they.
I mean,
like,
Grok crashed the other night.
Yeah. Yeah. And then GTC 2025, they unveiled the photonics, the co-packaged optics, which actually allows them to now sell hundreds of thousands, if not millions, into one cluster. So the order sizes can now get even larger because now they have the tools to connect them.
I mean,
Like,
it's just one of those things where cycles always happen. Okay, like I want to look at a chart of the Nasdaq. All right, this is something that people have to remember. Cycles always happen, and you go back 10 years, you had cycles where it went down drastically. I mean, think about it, 7,500 to 6,300. That's a big drop,
Yeah.
percentage wise. That's a big drop. Everybody thought the world was ending during COVID. It went from 9,500 all the way down to 7,000. I mean, in 2021, it went from 16 and a half all the way down to around just under 11,000. So these things happen. You have retracements. This is a healthy market. In 2024 summer, you were just over 20,000 and it dropped down past 18,000. This current crash, nothing we haven't seen before.
Right.
And
Right.
eventually it's going to rebound. I mean, why are we acting like this is something different than ever before? People never learn lessons of history. Whether it takes a week, a month, or a year, or 2 years, the markets always bounce back. Unless something really happens in the economy, it's not going to be elongated for more than 2 years.
Yeah. Yeah.
So short-term investors, I think, are the ones making all the noise. I don't think long-term investors are even worried.
Out of the like outside of the Mag 7 or Mag 6, however you want to call it, what else is getting you excited in terms of other plays that maybe are disconnected from artificial intelligence? And they don't have to be, but yeah.
You know that I own a lot of different companies and I invest certain buckets of capital for certain reasons. So you're going to have to be a little bit more specific because I like certain things for certain reasons that are applicable to me.
So, all right, we can go through a list, but Robinhood, do you have an allocation
No,
there? Nothing that gets you excited there.
no,
All
it's
right.
not for me. I'm not
What do you
saying they're not going to do great things or they're not going to be vastly vastly larger in 5 years from now. I'm just saying it's not for me.
I'll set you up a little bit. Anything in financial services that you're taking a liking to?
No.
Not Block?
Well, okay. I
Oh,
think
well,
I wasn't thinking about that. I think Block and PayPal are severely undervalued. I wouldn't be surprised. Like, I'm actually going to write Alex Chris a letter publicly. I just haven't gotten around to doing it yet. I want to do it before earnings, but I think they're significantly undervalued. I think there's an opportunity in both those companies, and I think that there's a lot of upside potential there. But I am buying Block. I'm not buying PayPal right now. I got called out of my shares, and I've been thinking about starting a position again, but I haven't pulled the trigger yet. Where are they right now? They're trading at what?
last I checked, it was like 64.
Yeah, 64. I mean, I think that's a great price right now. I really do. That's interesting.
I want a little bit lower.
Yeah, I mean, I wouldn't mind it going back into the 50s before I reestablish a position, but I think it's a solid company that everybody's getting wrong, and I think it's going to do great things. But I mean, for me, there are some investments that have already tapped out and I think are just dividend plays, which is fine for me because I'm in at a very low price point. Like Altria Group. I tried talking everybody into this. You know, I tried talking you into it,
You
and I tried
instead,
talking.
I pawned it off to my dad. He's been buying it like crazy.
So I don't know about buying it now, but when I was buying it, it was a steal. I mean, I was buying it at $41 and the dividend was around 10%.
Yeah.
And it's up to 56, 57. And I've been compounding that dividend for the past couple of years. I mean, you don't need to have a crazy home run all the time, but when you're seeing a company like Altria Group, which is controversial and is getting beat up because it's a tobacco company, I happen to think that tobacco is not going to get outlawed and it's going to remain legal. People are still going to use the products, and it's a misunderstood company because of perception. And I can deal with that. Now, I don't smoke, but that doesn't mean that other people don't. And the bottom line is it pays a huge dividend. It continues to increase EPS. It grows its revenue, and it traded at a very low valuation. It's trading at like a 7 PE when I bought it. So there was an opportunity there. Now my price point, I think I have an average price point with a yield on cost of like 9.5% before you factor in the dividends that I reinvested. There was a very big opportunity in commercial real estate. I took a big position in SL Green. I know
So
Chris Patel did too.
with Altria, really quick, this is another reason. I'm not a smoker either, and I know less and less people who are. Do you think that, people quit? Like, are the younger generations that are coming in that should at this point be their primary customer are not really picking up smoking?
I think there's less and less people smoking. And I think that Altria and British American and Philip Morris are going to go more down the e-vapor route. And look, if I see a situation where it looks like their revenues are going to start getting impacted, I'll exit the position. I'm not married to it, but for the time being, I'm fine getting my yield on cost
Yeah, yeah.
because
Especially if you're,
I think I can still extract value out of it.
yeah, yeah. No, and
Commercial real estate was a play. I still think SL Green. It's down a little bit now, but I mean, my average is like 21, and it's at 56 right now. And when I was buying it, the dividend was like 15 or 20%. And, you know, I think it can go back to 70 or 80. But at the same time, people aren't leaving Midtown Manhattan in New York. Vornado was another one I invested in. Same reason. So you just got to be willing to go against the grain. Like with SL Green and Vornado, I looked at the comptroller reports of how many people are riding the subway. And I looked at what it was pre-COVID and what it was in 2022. And I figured out that when you apply a 3-day work week versus a 5-day work week, because a lot of companies were hybrid, it was within a 5% difference. And then I started looking at their rent occupancies. And I'm like, well, their rent occupancies are roughly the same as what they were. Nobody's really leaving. And everybody wants a conversion midtown because they're closer to the subways. I mean, you came to New York for the conference.
hmm,
You understand somewhat what it's like to go into Penn or Grand Central and just be in Midtown Manhattan, how big New York City is.
yeah,
Companies don't want to be too far away from it because it is a hard sell with some people coming to the office. If you have to come into one of the two main choke points, which is Grand Central or Penn Station, which are
mhm,
both Midtown Manhattan, so Grand Central's 42nd and Lexington, and then Penn Station is 34th and 7th. So when you look at New York City, if you have to go all the way uptown or you have to go all the way downtown the financial district, you're not walking. Like that's just not, you're just not doing that. If you go,
Are
if you're
are
going
you just
across
saying that they
Midtown,
own prime real estate there?
yeah, if you look at a map of SL Green's properties, they own the top, and same with Renato. They both own gem properties in New York.
Got you.
Um, should actually so
I guess that's the truth, or can be the case, right? Even in large vacancies, there's going to be these properties that just do not see any problems because they're such sought after properties.
so companies don't want. I mean, look, if you have to get off a train or a subway and then get on two other subways and then walk 10 minutes to the office, it could take you 30, 40 minutes. Companies want to be in Midtown, and these companies have the best properties there. So I looked at it as a huge opportunity, and it ended up working out. I mean, it those are some of the opportunities. There was an opportunity in regional banking. I didn't do nearly as well as Amit and Chris because I didn't put as much money into Truist, but I was on the Truist train when they were getting on and we were talking about it. I mean, there's always opportunities. It's just I look at things for other reasons. And, I'm going to share right now. So this is when you look at this is looking from uptown to downtown. And these are SL Green's locations.
Yeah. Wow. Wow.
I mean, full Midtown. Their cluster is full Midtown. I mean,
That's crazy.
and you look at some of these properties that they have. I mean, it's
What's
just
their market cap?
one Vandy's crazy. Hold on one sec. So you look at some of these buildings. They own Rockefeller Center, Park Ave Tower. I mean, hold on. One Vanderbilt is insane. If you stand next to it and look up, it's insanity. It's really crazy. 625 Madison. I mean, these are the crown properties in New York City. I do think that there's a lot of potential in SL Green going forward. And there is, I think in this deck, there is another thing that's interesting. I mean, you don't want to get off a sub. It's crazy to travel throughout New York. It's wild. Just give me one sec.
And so, whenever you think about the size of the investment that you've made in a company like SL Green, comparatively to like in Nvidia, for example, this trumps it in your portfolio, I assume.
Nvidia is a bigger position in my portfolio than SL Green now.
Wow. Wow. Okay. Obviously, I get that the upside on Nvidia is larger, but
And
it's also a
if
newer
SL
position.
Green, if Nvidia keeps going down, I would seriously consider exiting SL Green.
Wow.
But once again, I build a portfolio that can withstand downturns. I mean, SL Green is something that's probably going to do pretty well. And in periods of volatility, it's not going to really get shooken up that much, I don't think.
Also, is this their investor day or their quarterly presentations? This is the
No.
longest presentation
Yeah,
I've
I
ever seen.
want to find the casino stuff.
Is this a quarterly report? What is this?
No, it's the investor deck.
Oh, okay. I was gonna say this is huge.
Yeah. So okay. I don't know where it is in here, but SL Green is in the running for one of the downstate licenses. New
For
York approved 3 downstate gambling licenses. They're teaming up with Caesars Entertainment and Rock Nation to put a casino dead smack in Times Square. Now, I believe they will be the property owner. They will lease it out to Caesars. Caesars will be the operator, and then Rock Nation will be doing all the entertainment. I think there's 12 or 15 companies jockeying for one of the 3 licenses that's been approved. And this includes all of New York City. So New York, so Manhattan and the boroughs. I think the Aqueduct is going to get one. I think you're going to have one in the city, and Belmont may get one, but remains to be seen. But if only one goes in New York City, I think SL Green, being the largest commercial real estate holder in New York City, teamed up with Caesars, has the best chance of getting it. Now, there's also a big investment group looking to do it at Hudson Yards. That could also get one. But I do think there's going to be at least one outside in one of the boroughs. So I think you'll get a big news pop at the end of this year if SL Green gets one. But no, the market cap's small on them.
Yeah, it must just be a crap ton of debt, but that's normal, I guess, for a real estate holding like this.
$4.5 billion.
Is their market cap?
Yeah.
And how much debt do they have?
On the balance sheet,
Like 40?
no, 2.9.
Help me understand.
No, listen, when
They have
I invest,
properties that are worth 5 billion, don't they?
well, you have to remember REITs are different because you're depreciating the assets. There's amortization. It's not looking at it the way you would value a traditional company.
Okay.
Because there's all different accounting metrics and the property value, because of tax rules and everything else, they depreciate their assets. So you're not going to have on the books. If they have a $50 billion real estate portfolio, it's not going to show that on the books.
Okay.
But
Okay.
the way that I
I've
used
never
to
held
look
a
at,
REIT once, so
yeah, so the way that I used to look at SL Green is I would look at their book value. Okay. So in 2020, during the pandemic, they had a book value of $70. In 2021, I think I invested in them in 2021, actually. They had a book value of just over $70. Okay. Stock went to 19. And when I really did the research, I'm like, there's such a huge discount there. Just buy it up. And
this
that's what
was
Chris and I did.
this is whenever people thought that COVID was just going to have people leaving the
This
city
is
at mass.
when people thought there's a regional banking crisis and commercial real estate was going to default on the loans and it was going to cause a huge crisis and everybody's going to hand the keys back to the banks because of the debt models and everything else, which never happened. SL Green was never part of it. It was all second and third tier real estate, not Class A real estate that was going to be potentially in trouble. SL Green has sold some positions, exited some positions, and did a few things, but the book value is still always stayed over $50.
Yeah, yeah.
And when I look at this, it was something that had immense value, and you were getting paid a huge dividend for a time being. So, I'm not seeing in this market opportunities like that. I'm
Yeah.
seeing opportunities in big tech right now because to me, it's the same story as it was for these companies back when big tech was going crazy. And now big tech is out of favor, yet their profitability is telling a different story.
Isn't
And I'm
that so
like, it's
funny,
the
eh?
same freaking thing. It's the
I
same thing as the way I love to invest.
I was talking to Amit recently, and he was like, "Well, everyone's rotating out of big tech," and I'm like, I like big tech. Like you knew me, probably 2 years ago, where I didn't really have any big tech in my portfolio, like the way I do now. Google and Amazon. I've got almost the entire Mag 7 now. Before I was just one name, two names. Like it's crazy how much deeper I've gotten in terms of the diversity of the Mag 7. So, yeah, I'm super excited about big tech.
Yeah, I mean, look at this. You know that I was very big on energy transfer. And I
Yep.
tried getting you on energy transfer. Look what
You
it's
haven't
done.
left that though.
No, look at what it's done past 5 years. Now,
Yeah, I mean, it doesn't
granted,
look all that exciting.
262%
Oh, I can't see the number. I just
in
looked
5
at
years,
the
262% is not exciting.
No, that's exciting. I can only see the yellow line. You're not zoomed in enough for me to see that number.
And you're still getting paid a 7% dividend.
All right. Hold
But
on,
now,
cowboy.
granted, this is a little skewed because it's at the April 2020 levels. This is at the rock freaking bottom.
Oh,
But,
gotcha.
but still, over the past year, you still got 20% and you're still getting a huge dividend. And when I was buying this and writing articles about this, you were able to get this with 15% dividend at some points.
Yeah,
Distribution
yeah.
because it's a K1. But there were a lot of opportunities in the market, and I'm not seeing them now. It's big tech that's the opportunity. And everybody's scared of it for the wrong reasons.
Can we switch over a little bit? I want to talk about some names that people are more familiar with.
Sure.
SoFi.
Why do we have to talk about SoFi?
I think Anthony Noto wrote an article about you.
I'm going to respond to Anthony Noto. Don't you worry.
Publicly or right here, right now?
Publicly. I'll respond to him.
Can I read something out to you?
Is it the long one that he wrote the other day?
Yeah, I'm not going to read that out to you. I'm going to read out a single line from it.
Sure.
Yeah, right here. So he thinks that there's a massive disconnect between what is critical to do versus what is not critical to do. And that, he wants to get everything done, but he said, do I strike you as a person that knows what needs to be done and decides not to do it? Or perhaps what one person thinks needs to be done is not the right priority?
You think that's directly to me? Wow.
Legitimately to you, because you want business banking and wealth management.
So
I'm sure people like myself asking for level 1 options and stuff like that is also baked in.
I think that's more toward people with level 1 options, but it could 100% be about me. Um, look, I've said from the beginning that him and his team know better than me. I'm not part of the
Yep.
company. I'm not running the company. You've heard me say that.
Mhm.
I have always said that before I say what I want to say. I always say, this is why I'm not the CEO of SoFi and why I'm not running the company or part of the management team, because I have no idea what is best for the company. They do. That's why they're in that position. Now, when you strip that away, I do think they are missing the mark on certain things. And I do not think that they do a good job with advertising. I think that Robinhood has done a much better job with their advertising. SoFi could do a better job telling their story and creating a buzz about their products. I really do. Why are you giving me that face?
No, I'm not giving you a face. I'm looking over at the article and thinking about you know, some of his comments. I was actually thinking about um he said, "Do I strike you as a person that knows what to do and then chooses not to do it?" I think that
Let me respond to that.
every well, hold on, one sec. I just want to say every competitor that they've ever faced and even taken market share from, you could also say that those CEOs thought that they knew what to do and were going after it as well. So I don't know.
Here's the problem I have with this whole thing. Okay. It doesn't matter what he thinks, and it doesn't matter what I think. It matters what the market thinks. Okay.
Hmm.
He is probably correct. I would say 99 times out of 100, he would be correct. But nobody is correct 100 out of 100 times. And I mean, I don't know anybody that's correct 100 out of 100 times.
100 seems like a small sample size, but yeah, no
So,
one's always right.
exactly. And I will say that he's probably right 99 out of 100 times. But what they are doing is turning SoFi into a company that resembles a legacy banking company without doors. That's what they're doing right now.
Yeah.
Hyping up the loan book, which I love, and I'm probably one of the only people that did not need to type in who Blue Owl is to know who Blue Owl is.
Bro, enough with this. I did not need to type in Blue Owl
So,
to know who Blue Owl was. I knew about them before that deal. So
okay, but you
so quit
are
that.
you're one of, I'm not talking about you. One, I said
They're a
I'm one.
massive company. I
I
think
said
a
I'm,
lot of
I said
people
I'm one of the few. A lot of people do not know who Blue Owl is, believe it or not. And a lot of people certainly don't know what business development corporations are. It's just not something that people talk about a lot. When's the last time you saw a Blue Owl on CNBC? These are not things that people talk about a lot. Now, people may know who FSK is because they're a little bit more public. But everybody's playing up the loan book thing. $5 billion deal. I love it because it's Blue Owl. They're one of the top dogs. But it's no different than what the legacy banking companies are doing. Now, SoFi is doing it for all the right reasons. I applaud it. I salute it. I want it to happen because it's going to benefit shareholders. But they are not doing what I believe needs to be done from an advertising perspective to differentiate themselves as this exciting fintech company. And they're turning more into a legacy bank without doors. And Robinhood is doing a better job, whether their product platform, let me be very clear. I'm a shareholder of SoFi. I'm not a shareholder of Robinhood. I do not use the SoFi product and I do not use the Robinhood product. Okay. Let's be very clear about that. But my opinion as a SoFi shareholder is that Robinhood is doing a better job advertising their roadmap, what their products are going to be, and they're making it seem, even if it's not true, that they're building a better mousetrap. And here's the thing that people are overlooking. A 3% cash grab is huge. So for people who have a lot of money,
the cash incentive to bring over your account.
anybody who moves $1 million over every $1 million, they're getting paid 30 grand.
Yeah.
Okay, to do nothing. Now, the reason why this is impactful is because they have to lock their money up for 5 years. Now, as long as they have guarantees and the product is safe and they don't feel any sort of way, people are going to look at this and be like, my bank's not giving me 30 grand on every million to stay or 3 grand on every 100 grand to stay. Why would I stay? It's free money. Catch, you have to lock your money up for 5 years. So now that's a client that cannot move their money anywhere. So that is a client that just got locked down with golden handcuffs.
But
That
I
you're
mean,
never getting.
yeah, they can leave, but then they just don't get paid.
Well, you can leave, you just don't get paid. So why would you move?
Yeah.
So, like I said, they have golden handcuffs.
Yeah.
Because the whole incentive of leaving and going to Robinhood would be to get that financial cash incentive.
Yeah.
Now,
So the interesting part too, and I swear this is a true story. Okay. Anyone at the
I
event,
know I heard you say it, and I get it, and it validates my point.
$500 million customer wanted to bring their money over, and they needed to validate that Robinhood had $10 million to pay them because it was a 2% match.
Yeah.
That's mind blowing.
So Robinhood could steal a lot of customers, not directly from the SoFi ecosystem, but if somebody was willing to move their money into Robinhood, that means they would have been willing to move their money into SoFi. Robinhood just took a potential client from SoFi. And I think that it didn't have
Maybe
to
not
get
that
here.
customer, but yeah.
I don't think it needed to get here. I think SoFi could have done such a better job with advertising that Robinhood wouldn't have even wanted to go down this road. But they didn't. And now we have a neck and neck race. And I think it's going to come down to advertising and product awareness. And I think at the moment, Robinhood is doing a better job in that area than SoFi. That's just my opinion. I could be wrong. And the bad thing is that SoFi already has all these products, but it's like nobody cares.
Yeah. The thing is that this is another thing that I always think of as well, is like, everyone's comparing where Robinhood will be
to where SoFi is.
Yeah.
Yeah.
But it's because of the speed of innovation. No one's thinking about what SoFi is going to do between now and October because
we don't
over
know.
The last period, they haven't done anything.
And think about this. When's the last time SoFi had an investor conference? Never. Pre-public.
Yeah, I think
quarterly reports don't count. When's the last time they had an investor day? Pre-public. Or right when they went public in 2019 or whatever it was.
Yeah, I was thinking about the Technisys. They did an investor.
No, that's not. That's an update. That's not an investor day.
Sure.
That don't count. Yep. When's the last time they did a conference? And here's my thing. You have the naming rights to SoFi Stadium. Okay. You're paying them for the naming rights. Now, I am not an advocate of wasting shareholder dollars, but I would like to think that Noto can make a phone call and get the stadium at a cut rate price when it's not being used or for free. Yep. If they could, they should do a full-blown investor day at SoFi Stadium and do it once a year. And if it costs too much, do it at their headquarters.
Yeah. You could definitely do one every other year for sure. And
like, Robinhood's doing one every 3 months.
Yeah.
Do one once a year, show the product cycle, get everybody excited, and show the market why they're wrong. It's not enough that they continue to beat and raise. At this point, everybody expects Noto to sandbag. Everybody expects SoFi to beat. It's nothing new. And got news for everybody. While you and I love it, the market doesn't seem to care.
It's true.
And what ultimately matters is the market's perception. And they need to do a complete overhaul on advertising. And the other thing is, I agree with Noto. What I want to see done may not be mission critical. Okay. But unless he actually comes on, and I think out of everybody, he should go on your podcast, because I think you'll be the most fair, less critical, and you'll have a much better conversation with him than other people. But I think he should really explain certain things, explain the roadmap. And I never said I know better than the guy. Obviously, he knows more than me, and he knows better than me about what is best for SoFi.
Yeah.
But What is their, do you know what their biggest ETF is by any chance? What's the
Yeah.
ticker for their S&P one? Do you know?
Sorry, what's the AUM for it?
No, what's the ticker symbol for their S&P one?
It's is it SOFY? Is that what it is?
I have no idea. SoFi Select, it's SFY. Okay.
SFY. Yeah, it should have about a little over $1 billion in
443 million in AUM.
if that's true, it has dropped because they have an ETF that had over $1 billion. So I'd be really surprised if it's got cut by 60%.
I'm looking at the SoFi Select 500 ETF because I'm going to have a point on it.
Where are you looking at that? Because I see one here that says it's at 830 million.
What ticker?
SFY.
Seeking Alpha is showing 443 million.
Okay.
So it could be wrong. Let's go with what you're saying. How much is it?
830.
Okay. So SoFi is charging 0.05% on it, which is great. So 830. Hold on.
Yeah, you might be right. I don't know.
Look, I'm
Yeah.
looking at what Seeking Alpha is saying. I have no idea what is correct, what is not correct. I couldn't tell you. But on 830 million, they're making $4.15 million in fees on it because of their expense ratio.
It's nothing.
So, but here's where I'm going to go with this. They're already doing this. And let's just, for argument's sake, because we don't know, because we've never really done a study on all of their ETFs and mutual funds. Let's say that on an aggregate, they're bringing in $20 million.
It would.
I have no idea if they are or they aren't. I have no idea. Okay.
Yeah.
But it's still a line of revenue. Okay. Here's my thing. You already have these products built. Why wouldn't we want to get into business banking? Because you already have personalized checking built. You already have all the personal lines built. You already have the platform. It doesn't make sense to me. And once again, I'm not part of the company, so it probably wouldn't make sense to me unless somebody explained it to me. But to have the full back end built for personal, you would think you could just replicate, do a few things. And I know I'm oversimplifying, but it shouldn't be that big of an uphill battle to get business banking. And once you get business banking, you now have business lending. Same way that personal lending has become their biggest line item. Business banking could be very big. Then, when you have that in, you already have a full book of customers. You already have the robo-advisors. Build out a wealth management team with Liz Young heading it up. Brilliant woman. You can't tell me that she can't build a team to do this. Have her do it if she wants to. I think she'd be phenomenal at it. And build out wealth management. Go to your business customers and become a custodian for their 401k plans and 403b plans. I've talked to the company that handles mine one time in 12 years. One phone call that in 12 years I've made to them.
Right.
It is free money on the table.
So,
Now,
I talked to Vlad about this.
So before you say it, they're already getting their 4.1 million from their S&P fund. Okay. That would be one, because a lot of companies don't like to allow their employees to invest in individual stocks. They give them a list of 20 or 25 ETFs or mutual funds to invest in, and that's what they get to choose from. They would be able to get whatever the asset management fee is, half a point or 100 bips, whatever it is. They're going to get that on all the plans, sitting on their platform, money just coming in. And then they're going to get a percentage of that money going into their proprietary ETFs because maybe they say, listen, our expense ratio is 0.05. For these plans, we'll give you 0.03. they're not doing anything extra, and give them a cut rate, increase the AUM of their ETFs, make them look more attractive, increase the amount of revenue that's being generated from the management of the ETFs, and then generate the revenue from the plans. It's just, I don't understand why they're not doing this. And they want to get to a top 10 financial institution. And that's why I'm harping on it, because his words, not mine, top 10 financial institution. You want to get there, this is what you got to do. You're not getting there anywhere else except getting in business, getting in wealth management. You want to crack the code, you got to be in it.
So I asked Vlad about this, which is funny. And they said that the managed portfolios was the first step into this game.
Mm-hmm.
And then they said, hey, well, are you going to be getting into employer plans and all of these things? And they said, we will one day, like that's on the roadmap, but there's like essentially no land grab there. And that they're going after the areas in which they think there's, a massive change of hands. I'm paraphrasing, but they will get into it, but there's essentially no rush because there's no new solutions in that area. And so I think that and he also said that they want to have a more of a name in that space whenever they do start going to institutions. And so I think that they're starting to go direct to consumers with the managed portfolios to build up a reputable name and then go into that space. And essentially they just want to walk in, as like winning people easy. They think that it'll be pretty easy once they go there.
And we don't even know what SoFi's plan is on that. And once again, if they do not get into this, it's just one more thing Robinhood beats them at.
I'm sure they will. Well, I mean, they already are dealing with employers, right? They have SoFi at Work,
which is even more reason why it makes no sense for them not to be in this. It just seems like low-hanging fruit.
Yeah. No, they definitely have a lot of the tools that integrate well with there, but
and you can't tell me business lending won't be a success.
No, of course, but they already are in there with referrals and stuff. I think mainly
what be referrals? What be?
I think mainly it is a communication issue more than anything because
Agreed.
we don't know if they're all like this could be around the corner.
Agreed. They're playing too much close to the vest, and then it leaves people like you and me to speculate. I don't want to speculate. Tell us what the freaking plan is.
Yeah. Yep.
Robinhood's got no problem telling you what the plan is.
No, not at all. What's so funny is I was going over there and a friend of mine who hadn't did a interview with Vlad, he said, oh, well, I'm interviewing Vlad whenever I get there. Are you also doing an interview? I said, no, I'm not interviewing. I have no questions for him. Like, they've answered every one of my questions. I could not sit down with Vlad for 45 minutes because I'm like, I already know all the answers.
I think Noto is a phenomenal CEO. And I love that he takes responsibility and says, don't beat up my team. It's on me. I'm the end decision maker. Everything is my fault. I love that.
Yeah.
Love it. I think the guy managed a situation that a handful of people could manage their way out of. Take nothing away from the guy. Guy's incredible. I think there's a communication issue and an advertising issue. And for all we know, these products are coming in the next 6 to 12 months. But for all we know.
Yeah.
And the RFP process is the most disturbing thing because all they have to do is say, listen, we're involved in 15 RFPs. They're not breaking any confidence with this or any NDAs by saying generalizations. They could very easily say, because they went from talking about RFPs and throwing out big financial institutions to not saying anything. All you have to say is, listen.
They said that they haven't lost any deals.
They haven't talked about anything, though. All they have to say is, we're participating in 15 RFPs, including thrift banks to large financial institutions. We have 3 that we've been involved with for over a year. We are not sure when the final decision is going to be made, but it looks like final decisions will be made in 2025 on at least 3 to 6. And we will have more updates when we're able to provide them. But These are the ones we're on, and we expect more to be coming down the pipe. They're not bringing any confidence by saying that. They're updating the shareholders, and they're providing some type of guidance on what's going on. Right now, we have no idea how many RFPs they're involved in. We have no idea what stages they're in, and they just completely stopped talking about them. So you want SoFi to have a tech multiple? Guess what? Got to be a technology company. Only way you're a technology company is through a tech platform. And the RFPs are the critical point. No one wants to talk about critical success factors. This is the biggest critical success factor because it is the one thing Hood does not have. Hood can rent out the banking charter through Coastal, do whatever they want to do with that. They don't have the back end. They don't have a Technesis. They don't have a Galileo. SoFi needs to beat them at this.
In fact, they're tapping Galileo for a lot of services.
And they need to publicize this. And they need to win some RFPs and change the perception, start generating revenue from this, because that will give it a hybrid or a tech multiple. Outside of that, they're going to be looked at as a financial institution and be valued as a financial institution, not fintech.
So right now, let's just double check so I got my numbers correct. SoFi, after the tariff drop, is at $11.31 in after hours.
Okay.
You are DCAing into a couple different names.
Yep.
Is SoFi one of them?
No.
Hold is gold right now. You holding or are you trimming?
I haven't sold anything.
What's the play?
I don't know what the play is because I don't have enough information to make a decision. That's the problem.
Waiting for next quarter.
Yeah, I mean, we're going to get the next quarter results in 4 weeks. I mean, I don't have enough information to make a decision. I love the company. I think they're going to do great things, but I'm annoyed. And, every day I think about exiting half the shares and moving into Nvidia because I think there's more alpha at this point because I don't know what I don't know. I mean, the market doesn't seem to care. Even when things were going well with the market wasn't getting excited over SoFi. And there's only one, you got to change the market's perception. There's only one way to do that. You got to talk.
But do you think that can change?
Absolutely, it could change.
I saw them hiring for an AV specialist, like for someone to help with live events. And I'm just wondering, like, is enough? Are they actually doing an investor day? Like, are they taking into account what we're saying? And Noto says he listens to every word.
Live events, they just did the golf thing. They're probably hiring people for that.
They're not a part of that.
What, TGL?
Yeah, they're not putting people from SoFi on that.
Who knows? You don't know what the play. But that's the thing. We don't know. They need to do a better job of talking. Like he says that he sees every word, but he's not going to listen to this.
I am speculating here. If they had people on TGL, like that would blow my mind. I'm sure they have a part of their ad team there, and then TGL and Tomorrow Sports does all the tech and everything else.
I have no idea. All I know is they have a communication problem that needs to be fixed.
Yeah, that's for sure. And until then, you're holding.
We'll see. I mean,
I'm not holding you to anything. You're your own person.
Look, they haven't given me a reason to sell.
Mm-hmm.
I wanted to remain a shareholder, but it's just one of those things where it's getting harder and harder because there's so many opportunities. And the fact that I think that SoFi has tremendous opportunities still is why I'm still in it. But I was in it for a lot of reasons. And I don't want them to spend money. They could do a 100% virtual thing. Take their biggest conference room, put up a podium, and do a makeshift thing once a year. I don't want them to spend money on some lavish thing. I don't even want to be invited. I could care less. I wouldn't even go if I was because I just don't like to travel.
And you know what's funny? He definitely would not go.
No.
He was telling me offline some events that he said no to. I don't know how you do it.
No, and look, I say no to things that are 10 miles away from me. Like I'm just not interested in that stuff. But I think it's important to, at the very least, do a once a year thing for the shareholder base. Like they've done the Q&As before, do a full-blown investor conference. Show us the roadmap. Like, that's my biggest plea right now. Show the roadmap. Show why you are the number one in the space. Show why people should not get excited about Hood, but be excited about SoFi. Maybe you'll change the market perception. Maybe you'll change the perception of people on X. As much as that doesn't matter to some people, it matters to others.
Well, you know what? I do think that's true. Like, I think a lot, like, what I got from Noto's message is, hey, you know what? These people don't have well, not insider information is a weird term now, but we're uneducated in the space of SoFi versus Noto or executives. But like, you're not also helping us understand.
I'm not asking to know what the freaking numbers are. I'm asking to know what the roadmap is. Two different things.
Yeah, no. Just help us understand why the decisions that you're making are the right ones. And you know, he said some competitors, whether just or unjust, are doing or saying these things. Why? Why is it unjust? I just like to get into the mind of Noto a little bit more. And it's so funny. Every time he talks, I get more bullish on the company. But it's so few and far between that the spaces between when he's talking, people can,
Problem is, you hear from him once every 3 months. He goes on CNBC and Bloomberg and Yahoo Finance, and then he disappears.
and those
And
quarters are great when they're happening.
yeah, the guy is a phenomenal speaker. Look, his speech at Stanford is what made me invest in SoFi, hands down. There's no question about it.
Who
And
dares wins, right? Is that the
I really think that this guy needs to speak more because he's so phenomenal at it. And there needs to be investor conferences. Look at Palantir. Palantir doesn't do it. And look, I'm a long-term shareholder. Okay. I was one of the original bulls on Palantir, and I changed to neutral because I think it's overvalued. But I'm not selling because I think Palantir is going to be significantly larger in the future. But Palantir started having their AIP cons to change the narrative, and they changed the narrative. The narrative was it was a black box. The narrative for anybody who didn't want to do the due diligence was this was a black box company that nobody knew what they did, and they were making all their money off the government. Couldn't have been the furthest thing from the truth. AIPCon took the kern, peeled it back, and showed everybody why this is the dominant company. And they didn't do the talking, their customers did. And when you get the biggest companies in the world, BP, Kinder Morgan, Tyson Foods, Tampa Health, Cleveland Health Clinic, all these places, Cisco Systems, come up and discuss how Palantir has done what no other company could do for you and why you are using their software and why it is the best software you've ever used, it speaks volumes. And their deal book reflects it. And it changed the narrative. It went from no longer being a black box to a company that was scaling US commercial at warp speed and a company that could not be matched with software. But that doesn't happen without those conferences.
and think about how many they've done, right? Both Robinhood and Palantir. It's like obviously they're seeing success because they just booked another 5.
It doesn't happen without those conferences. Yet SoFi refuses to do it.
They might, who knows? They might change their mind.
I mean, I actually think that Noto should listen to this whole segment and maybe you should clip it and send it to him. But I mean, I don't think he's going to listen to it. I think he more reads what's on X and that type of stuff because it's just easier. And this would take time to listen to it. But my plea, my only plea, is to show us the roadmap. Do an investor day, show us the roadmap, and people will shut up and stop busting his chops.
Yeah. Yep. Well said. I think that we should end it there.
Yep.
Steven, that was 2 hours.
Yeah.
Nvidia, Google, Amazon, SL Green, SoFi. Thank you so much for your time, brother.
Dude, Nvidia is incredible, man. Incredible. I don't think the world's ready.